You're with us here on BTTV. I'm Abha Bakaya. This afternoon, we're talking to Kranthi, Bathini, Director Research at WealthMills Securities on the mood of the market. Let's just first take a look at the setup and how we're doing today post, the action yesterday. We're seeing just about flat. I mean, obviously a negative bias. Sensex is down about 0.5% right now, hovering around that 60,000 mark once again. Kranthi, good afternoon. Let me get your sense of the market because it's now treading water at this level. We haven't seen as sharp a bounce back as perhaps we would have anticipated. What's your sense? Are we going to see lower levels or continue to kind of hold forth in a range?
Hi, Abha. Good afternoon. Yeah, what we can see a rainbow trade right now, and what we can envisage is definitely this is a market sell on every rally and buy on dips. So that's the reason markets are stuck up in a range right now. We need to see the Nifty staying above 18,000 levels to get a firm belief that markets are going to be in a positive territory. Till the time markets are going to be in a range bound, we know the overhangs and the commentary that's coming from the global markets. Inflation is the key worry right now, and how the central banks going to handle and how RBI stance going to be. This is the crux right now, and that's where the markets are trending right now in a range-bound trade at this point of time.
Okay, so markets continue to trend in a range as as you've sort of said there. Let's take a look at in pockets of the market, however, where you feel one could buy in on dips. Would you buy in on dips, Kranthi, or would you sit on the sidelines for now?
Abha, it's going to be more on a stock specific and sector specific right now. One, if I have to emphasize a sector like defense, there is a commentary that's coming from the government and also the Ministry of Defense. The defense spends are going up, and every company have a very good defense order book right now, and these are executable orders in the coming quarters. So that was the reason. If you see company like HL, we discussed on your show a couple of weeks back also, the stock went up by 5%. So these are the different pockets one can cherry pick at this point of time. They can utilize the negativity in the market to accumulate specific stocks in their portfolios on a longer term basis.
Okay, fair enough. I'm looking at some reports where because of the heightened temperatures this time around in the summer, Jeffries, for instance, has said that we might actually see an increase in sales and margins, for some of those consumer-oriented companies like a Crompton, V-Guard, the likes that all run up in the summer, on the back of that trend. Would you agree? Do you feel that could be an interesting trend, over the March to May period?
Yeah, I will agree with the commentary, but I can call these stocks are like a popcorn stocks. Okay, if you go for a movie, you'll have a popcorn. So this is the season. Okay, you can cherry
Yeah,
pick these
that's
stocks
true.
for some time, and you can enjoy for time being, and you can book profits. But these are not the stocks because we are entering into a high inflationary environment. So and we are entering into a high interest rate environment. So the consumption, how it's going to be, we need to wait and watch. And so that's the reason I'm calling these stocks as popcorn stocks just for the season.
Okay, fair enough. What about FMCG? Just sticking to that overall theme of consumption and looking at the inflationary environment as well as the incoming summer months. Is that a segment we've seen some great returns when it comes to the likes of an ITC, for example? But is that something you feel will sustain, or would you stay away from the slightly more expensive FMCG names right now?
FMCG for a longer term basis, one can a investor looking forward for a medium to longer term basis. Definitely, the weakness in the market they can utilize and cherry pick the names in their portfolio purely just because of a longer term basis. Because for India is concerned, the high inflationary environment, one thing to hide and one thing to invest for investors is equity. So FMCG offers a very good opportunity for the investors for a longer term basis.
Okay. Just looking at the markets, I'm just going to run through some gainers. The Adani Group stocks are actually moving today. We've got a Shilpa Medicare that's up about 12%. PNB Housing is up 4-5%. Manappuram Finance has been seeing some steady uptick coming in. Karur Vysya Bank is seeing a little bit of traction. Shriram Finance, some of these mid-cap financials. Canfin Homes, for example, another one there that's also seeing some gains coming in today's session so far. From the financials, Kranthi, what are your picks? And I'm going to first ask you from the mid-cap pocket, ancillary financial plays as well, insurance, housing, etc. What's looking good to you, if
Above
anything?
for stocks in banking and financial services. I stick to for the large cap names at this point of time because we need to see how the RBI moves in the coming few quarters. The stance on interest rates, that is extremely important to pick the stocks right now. Even though some stocks looks valuations looks attractive, but at this point of time, given the kind of structure of the market is concerned, I stick to the large cap private sector banks at this point of time. Uh, to uh, to name banks like ICICI and HDFC in the portfolio.
Okay, I also want to talk about auto because we've got, even though M&M's down today about 2%, but starting to see some buy calls coming in, even on a Tata Motors. Within the auto pack, are you again, looking at any particular value buys, or are you staying away? Because until a while ago, we were really not seeing any traction. So again, maybe everyone's betting on consumption picking up.
Yeah, Abha, what we are witnessing at the ground level, complete different difference of the economy. One hand, we were talking about the rising interest rates, and if you call up any auto dealer and ask for some of your favorite auto models, the waiting period is very much high, and they're also dealing with the shortage of semiconductors. But this, it seems to be the outlook is strong for autos despite of high interest rate environment. So we can see a completely different India this time. In a high interest rate regime, auto numbers tend to come down. But this time we can see the numbers are quite strong and the outlook looks sanguine. So stocks like Mahindra, any M&M, any dip that comes in the market, one can look forward to accumulating their portfolio. And also Tata Motors, it offers one can in a staggered manner they can accumulate. Uh, uh, as Morti also, one can accumulate in their portfolio on a longer term basis.
Okay. I know you mentioned defense, and that's, of course, a strong theme. But a couple of the other sort of, mid-cap themes, agri-commodities, fertilizers, sugar. I know this is all seasonal, Kranthi, but, sugar also some news coming in with the government raising sugar surplus estimates this time to 7 million tons. What's your view on some of these pockets?
About these stocks are last few months, all the sugar packed stocks are uh, run up a lot. On an average, these stocks are trending on higher note. So it should be very specific, and also what is their what is their ethanol branding story is playing for these stocks. So one should need to be stock specific, and also all these majority of the sugar stocks have debt in their balance sheet. One need to look for a cleaner balance sheet going forward for the rally to sustain in sugars.
Are you going to comment on Adani Group companies, Kranthi?
Yeah, of course, the stocks are running on higher. We can see some kind of profit booking in Adani Enterprises today. Uh, One need to, if the investors are entered in the bottom price, they would have made on an average like stock like Adani Enterprises from the stock has moved from 1100 to a couple of days back it touched 2135. So the stock has rallied a lot. So I can look these stocks at this point of time. Pure trading stocks right now. I cannot initiate a long-term buy calls at this point of time. Well, if the stocks are rising, because the stocks are in a high momentum zone, when the stocks are giving quick returns, okay, it's better to take some profit from the table and use this weakness in the medium to short term to make some trading money in these group names.
Okay, fair enough. We've also seen some resurgence in, the energy names. NTPC, of course, they've commissioned some coal-based power plants, but last week, GAIL was running up as well, for example. So we are seeing some traction on that front. What's your view on some of these names?
Purely on a longer term basis, these are very strong business models, Abha. So investors with a long term horizon, okay, definitely they can look these kind of names in their portfolios.
And from the metals basket, because we're seeing some amount of traction coming in there once again, anything that you're looking at from the metals pack?
At this point of time, Abba, I try to stay away from metal pack because we need to look how the entire saga of global growth is emerging. So based on this theme, we'll take a stance at this point of time. And in a medium term basis, in a short term basis, I try to stay away from metal pack at this point of time.
Okay, fair enough. So you do like defense, but from the deep cyclicals, energy, I'm not sure you're actively investing in. PSUs, also staying away, in terms of preferring the private bank, let's say, to PSUs. Would there be any PSUs in your basket right now?
At this point of time, Abba, we don't have any public sector undertaking banks. We are mainly focusing on the public sector banks at this point of time.
All right, great. So that gives us a sense. So if you had to give me a snapshot into how you're looking at the market, Kranthi, at this time, would you say a bulk of the investment would continue to be in large caps, which are perhaps safer at the moment? And out of that, would you say, how much of that would you attribute to, let's say, financials, and how much of it would you attribute to select select names across sectors, whether it's large cap, mid cap? For example, in defense, what would be your pick?
Yeah. If you see, we are at a very crux. The markets are, one hand, uh, the mid and small caps, majority of the stocks are in a complete consolidation phase, and the consolidation has been happening from quite a long time. So, and in the larger cap stocks, as the index also is in a consolidation phase, there's not much activity if you see the index level stocks are concerned. So, one need to pick up. Very stock specific. So I can accumulate the majority of our individual portfolio allocation is concerned towards banking and financial services, and also selectively stocks in defense like HAL, Garden Reach, and Mazgan Dockyard. These are valuations look stretched, but okay, these are the pockets offers good margin of safety over a period of time. So any weakness in these stocks, try to accumulate these stocks on a staggered manner going ahead.
All right, great. We'll leave it there this afternoon. Kranthi, thanks so much for joining us and taking us through your picks at the moment. Good chatting with you.
Always pleasure to interact with you.
That's our mid-market check, mid-afternoon market check. We'll come back with more a little later in the afternoon. But for now, we do seem to be slipping down about 0.5%. Let's see if we manage to hold ground or recover before the end of trade.